Why do you think local banks are not having the same experience or somehow the product?
The UAE banks were ranking in some of the worst surveys actually in terms of client experience. Our mission and our focus was very straightforward. It was making investing easy. If you start to process the failure rate of startups and starting a business, etc., you might talk yourself out of it. You need to make it intentional to be profitable. It won't just happen automatically. It was our first profitable quarter, and then we stayed profitable ever since. You don't need to sell. If someone believes in you and what you're doing, it never felt like selling. It was always a conversation.
One skill that every person on earth should have.
Storytelling.
Hello everyone, and welcome back to another episode of the Human Orbit podcast. With me today is Mark, founder of Sarwa. Mark, I just signed up for Sarwa. I bought a bunch of stocks and ETFs, and I have to say that the experience is truly amazing.
Amazing.
Now, why do you think local banks are not having the same experience or somehow the product? What's the reason for them not to have such a product? I'm not talking about the other brokers that are similar to you, but specifically traditional banks. Why do you think is the case?
I think Jad, my co-founder and CTO, for the first few months, he would always ask me that when we were starting to build, like, how are we going to win against these behemoths that are more capitalized, have more people?
Yeah.
Like, what's the catch? But at the same time, where I was working at Accenture, the UAE banks were ranking in some of the worst surveys actually in terms of client experience.
Yeah.
And from having worked a bit with some of the Canadian banks and global banks, I knew that it was actually very hard to pull off innovation in the context when you have so many different people, so many different departments, agendas, objectives, products to worry about. So
shareholders.
Yeah, there's so many things that for us as a Sarwa, it was our mission and our focus was very straightforward. It was making investing easy. And everything about what we do, everything, how we develop it. There's the what we do, which is one product initially, and now it's expanded into others. But the first iteration was making investing in stocks and funds very seamless.
Yeah.
Versus for a bank, it's buried under a ton of complexity somewhere in the app where you don't know how to find it. And when I went to visit a few branches in the UAE, actually, I would ask for a investment advice or how should I invest in 1,000 dirhams?
Yeah.
And the guy would start selling me gold because he had a commission based on this product. So just from that experience, you have the user experience, the sales incentives of the people, the different amount of products. So all of that coming together, we felt was just such a mess to orchestrate from the banks that we saw a very clear problem where no one was thinking of the customer at the center and what they need to be invested in to achieve their goals.
Interesting. So, and you mentioned something very important about adding more products. So obviously, everything that we see in financial services from a fintech perspective, everyone is trying to unbundle something in financial services or banking. So you pick something, you make it as, the best product possible in the market.
Yeah.
And then you try to add on top of it or to expand to other products.
Yeah.
My question to you, do you intend to be a digital bank, let's say Sarwa Bank in the future?
Maybe. It's not off the hook, or at least I would say the first version of fintech was unbundling. I think now we're in the second version of bringing everything back together.
Yeah.
And definitely, like when you think of our version, initially it was long-term investing. Then we added self-directed trading, crypto, commodities, high-yield savings. While we're far from being a bank, we're still an all-in-one investment app. So we wanted to really own the investment vertical.
Okay.
The difference, I would say, if you want to strip it to its core, like we're built in the modern era where a lot of these banks are built on very older, like much older cultures and ways of working and infrastructure ultimately. So I wouldn't be surprised if fintechs and banks all end up looking very much quite similar, with the main difference being the tech stack and the culture was just built in a better format.
Obviously, Robinhood has been granted a license to operate in the country. First, I want to get your take on them as Robinhood, as a product, as a platform. Second, do you think they will give you hard days in terms of competition?
I think we already have a lot of competitors, to be actually honestly. Like, just drive down Sheikh Zayed Road and you'll see
Capital.com.
so many CFD platforms, people like with deep pockets, etc. So I would say in a lot of ways we've already been exposed to a competitive environment in the UAE, which is very good for clients, very good for the industry in general.
To push you to the limits,
Exactly. It
yeah.
pushes innovation, it pushes just competitiveness. So I think we're already operating that, let alone another American player. Personally, I'm excited to see the impact.
Mm-hmm.
But I would say, it's been since we started, what we were the first at is the first fintech to be licensed. That's homegrown.
Yeah.
And really focusing on the UAE is our core focus. So building a brand and a product for the UAE is very different than exporting it from elsewhere. That was actually the core gap, whether it's Robinhood or Interactive Brokers or other ones. They're not really adapted as well for someone living here. When I tried to open an account for my friends and family in the UAE, it was a very long experience. The funding experience was expensive,
Yeah.
not instant. So I think there's room for a lot of different platforms. What sets us apart is really the simplicity and the localization to the Middle East. When we started building 8 years ago, before the UAE was what it is today.
Tell me which competitor you respect most, or maybe in another way, you fear the competition from them, if you have to think about one.
I would say banks are an entity that I have a lot more appreciation towards, because I think when I started around, I was 25, and I think you have a bit of that counterculture of, why are banks charging so much? Why are banks so slow? Why is compliance?
Yeah.
And then when you grow with time, you actually end up shifting from, initially all you want as a fintech is growth. And then you start to balance growth with security, with profitability, with risk management. And you end up appreciating a lot more all of the things that they have to manage and how they landed here. And it's not a great place for some of them, don't get me wrong. I think some compliance teams have completely taken over the org when there's a lot more room for collaboration. But I've changed my mind on just the understanding of how banks got here. I think there's a lot of, as you said earlier, a lot of stakeholders to manage, a lot of different priorities.
Yeah.
So certain things are meant to be the way they are. I'll give you an example. Like there's a Canadian fintech. Last week I was reading how they were criticizing the Canadian banks on, the fees they charge and things like that.
Yeah.
It generated a reaction, because I was like, you know what? You're playing a different game. You're currently subsidizing and maybe dropping your fees to ridiculous levels, running an unprofitable business.
Yeah.
While the banks are running a profitable business. So eventually you're going to have to raise your fees, and maybe even more than the banks, to make up for all this lost time where you were charging less. So the whole narrative around some of the incumbents are expensive is actually just isn't true. The banks just decided to be more financially sound. So I've learned to more respect, especially these banks that have survived hundreds of years and built really enduring companies, rather than your flashier fintech that's been there and is still unprofitable.
I didn't expect this answer, actually. I didn't expect it at all. I'm not sure there is a bank that has an experience like what you have. So here, maybe you're talking about the business model, how to run a fintech, how to make it profitable, how to manage risk, how to have a balance between compliance and innovation and technology and so on.
Because you're equally a tech company as a financial services company.
Exactly. Now the question is, if you were at a bank, so if you were leading a private banking firm or wealth management at X bank or whatever, and investing savings is part of that. So how would you address this differently? What would you do differently to make sure they cope with this disruption that you are bringing to the table?
I would look at my strength first and foremost. The question is, what would I do differently if I was in charge of one of these? Right? I would really understand what is my advantage. What is it? My people? Is it my brand? Is it my channels? Is it trust? Like, there's no one business model, or for every rule we've seen another model that breaks it. Like initially when we were starting, we were talking about the end of human advice, and everyone's going to shift towards tech-enabled advice.
No,
not true. People want hybrid. People want, it depends. Some people want to talk to someone. Some people want to chat.
Yeah.
So I would really focus on what is the core true differentiator and really double down on that, and constantly listen to what clients are saying they value about us. In our case, that's helped us a lot to know that, the 4 things people value about us are simplicity of the platform. So that really guides us that whatever we do, it can't be at the compromise of simplicity. The choice of asset classes on there, the trust being, a local homegrown company, regulated, backed by Mubadala, etc. And just the value that we provide through financial literacy, events,
Education. Yeah.
education. That's very unique to how we've grown as a company. You know, we've talked about other fintechs. Their approach is vastly different.
Yeah. Yeah.
Some fintechs have grown through a sales-led approach, not necessarily a product or
Yeah.
or brand-led approach,
Yeah,
and it's
yeah.
just fine.
Yeah.
So it's a reflection a lot about the founding team, the leadership team,
Yeah.
that really bring their whole personalities.
So
to it.
obviously, of the things that you mentioned, I'm sure it's somehow powered with technology.
Of course.
You are lucky to have a fantastic CTO at Sarwa. But having said that, I'm assuming you're like me. You've never written a single code in your life, so you don't know how to code. But you are involved somehow in technology.
Yeah.
So what are you doing to keep yourself informed in technology, and how important as a founder to keep yourself up to date with what's going on in technology?
Yeah, it's funny because I think when non-technical people at some point we toy with the idea of should I learn to code or
Yeah.
etc. Luckily, whenever I brought it up to Jad, he was like, "Don't worry, you have me. I've got this covered." And we've always had this partnership of, you know, you handle the tech side and I'll handle the business side, and we really enjoy bringing each other into each
Yeah.
other's to have a sounding board and discuss. But I think I'm very lucky to by just building a company that's growing at a very, very fast pace.
Mhm.
Where we're more than doubling every year, you need to always stay on top of, it's not optional. You need to stay on top of your industry, on top of client demand, technology. You know, we've integrated with 3 brokerages so far. We're constantly reinventing, throwing away the first version of the app, the second version of the app. We're probably on our 3rd biggest version of Sarwa. So it's,
And you are involved in all those decisions from a from a technology perspective.
product. Yeah, I think tech, product, business model.
Yeah.
You know, to give you an example, the first version of Sarwa, we thought people didn't want to pick stocks. People wanted to have their money managed for them in a portfolio. And with time, we let growth guide us. And the number 1 requested feature was we want to buy stocks. So initially, it sounds like it's a distraction. And then before you know it, especially after COVID, it became clear that we need to move into a real-time environment with a different brokerage and completely change the business model, the marketing.
So you did
the
the
brand.
pivot. You did a complete pivot.
So it's a
here.
complete pivot. That complete pivot involves, obviously, tech as a huge part of it. But then, you know, the tech team and the product team will handle a lot of that new integration. But just to realign the whole org and the board to that is something I was very involved in leading.
So before Sarwa, you obviously were a management consultant. And as a management consultant, you are exposed to see everything that incumbents and traditional entities, what they're doing, especially if you are exposed to financial services. Do you think that you were able to see what they are bad at, and somehow it helped you to start Sarwa, apart from the, maybe the idea or the reason for you to start Sarwa?
It wasn't so much what they were bad at. It was more, exposure to the industry, of course, the different product lines, interacting at the C-level. I think that was something I was very lucky to have in some projects, where sharing the investor story, there's one bank we helped shape their investor story for the analysts. So I was really fortunate to interact with the C-suite of a large Canadian bank and get exposure to a bit of everything. So it was more about exposure to different departments. And also, I think, realizing that you figure it out on the job. That was a big part of it. Like whether, my peers, they were really great partners, and I was just observing them interact and work and seeing that they were problem solving, and you didn't need to have all the answers. As long as you were really passionate and cared about that problem, or you'll figure it out as you go. I think that just bathing in that was enough to give the confidence, to feel like you have the right skill set to start a business.
Yeah, and this is a complete shift. So from management consulting to start an investing fintech. And I always say, to start a company, you need to have 3 things. You have to be naive, you need to have a high level of conviction, and you need courage to do it. Do you agree with this?
You need courage, naive, and
high level of conviction.
I mean, we were definitely naive. I think it helped. Like, we didn't know much about building a regulated business and all the different hurdles, and it's good. That's kind of what I was saying earlier. It's you figure out on you as you go. If you start to process the failure rate of startups and starting a business, etc., you might talk yourself out of it. So
Yeah.
I think a lot of founders think they're going to be the exception to the rule. And I think for us, you said the confidence. For me, it came from starting it with friends, like with Jad, and then other friends, people we knew, people I really respected, admired, and felt like they were top notch. I think that gave me the confidence to make the leap as well. I think doing it on your own depends on your personality, but for me, that definitely helped.
Okay, so hear me out. And this is the best part or the most important part in the episode. I am an employee having a full-time job in a bank, in a management consulting firm, a retail group, whatever, it doesn't matter. And I have an idea. I want to start a business. I want to start a company because I see this potential, there is a problem to solve, there is no player in it, and so on. And we know that a lot of them, they're not able to take this step because of a lot of reasons. So if you advise me to go for it, how would you advise me to do it? What would be the steps to do it, and what would you advise them?
Yeah, I mean, I'm not generally a fan of advice, to be honest.
Yeah.
You'll find a lot of founders like that because
I agree, yeah.
there isn't a single way of going about it, and each one is biased from their own experience.
Yeah, totally agree.
But beyond that, I would say there's a lot of literature. I think some of the best is still from the US on how to navigate the early stages.
Yeah.
Like the Lean Startup is a great book.
Yeah.
0 to 1. There's a few of these classics, I would say, that shape your thinking to, especially coming from management consulting, where it's a lot of planning and a lot of strategy
Analytical thinking.
and analytical thinking, business plans, and versus the other mindset is like putting that all away and going to talk to customers, putting something live,
Yeah.
starting with something you're embarrassed about. I still think these principles aged really well and helped us. Like the first version of Sarwa, it took us like 45 minutes to open an account. But you opened an investment account, you can get invested. It took us 2 months and a bit from getting a license to launching, when sometimes it can take banks years and incredible budgets. We were launching it on a couple $1,000s. So I think embracing really that constraint, so that instead of seeing it as a weak thing that you don't have resources, using that to your advantage to say, like, what is the simplest experience I can launch with? In our view, in our business, we didn't have that luxury. You had to have a license to ship a product.
Yeah.
So there was a certain amount of conviction that we needed to go to and testing it in the real world.
Yeah.
So the other thing, I think another myth is that people think you need to just jump into it without having a safety net. Like for us, we actually took about a year before leaving our jobs for the idea to sink in, to really realize, so that it's not a rash decision, it's really thought through. There's a fallback. What's the worst case scenario? Of course, starting young really helps. Like for us, that was a big motivator.
Yeah.
And I think ultimately the biggest desire wins. If you really wanted to start it, that's going to win over all your other constraints.
Yeah.
There's a word called entrepreneur that made me react, being like, I actually want to start this. And like the fear of having time go by and this stays an idea and I grow out of it. And there's a lot of ideas. I think founders are constantly thinking of things, but which one is going to stay and survive the test of time, that you want to pick this one as a problem.
And the other thing is, I always say, the worst case scenario, you are not going to die. That's for sure.
Yeah.
A part of you are doing something crazy, but for sure you are not going to die. And it's worth, you will learn a lot. And I'm not sure there is any other experience that can expose you to this world, like, starting a business. Yeah. Even though it's so hard, it is brutal, it is not easy. You go through many challenges, but I mean, I would do it again, even though I went through many things in my life, but I would do it again.
You do that though, you say that because you're bootstrapped. I think the worst thing that can happen to you is you raise a lot of money.
Yeah.
And it removes the signal. You actually can survive 5 to 10 years on that money.
Yeah.
But there was never a real need for what you were doing. Because you raised that money, you didn't have the urgency, and the reality didn't set in on year one.
Yeah.
So you end up wasting a ton of time. So I think that's why I'm very much a fan of not raising too much, so that you have just enough to remove a bit of that unhealthy stress.
And what you need in the business. So yeah. I'll come back to this raising thing. And it's funny talking about, between raising capital and bootstrapping. So as someone who bootstrapped, sometimes I would ask myself why I didn't raise capital.
Mm-hmm.
And every founder I meet that raised capital, they told me, we wished we didn't raise.
The grass is greener.
And
yeah.
the people who are building the service, they want to be in product, and the ones who are in product, they want to be in service. Yeah, it's a classic thing. So something I like about you, Mark, which is very interesting, and I applaud you on that, which is the build in public mode.
Mm-hmm.
Now you became very advocate for talking about what you are doing at Sarwa, sharing pitch decks, sharing real stories, the messy that you have, the chaos that you had maybe in the past, your problems with investors, which no one has the courage to talk about. Why you are doing this? What's the reason?
Let me ask you this: why not? Actually, it's more like I can't believe I wasn't doing it.
Yeah, that's the thing, because no one is doing it, and you are one of the few ones who are doing it. I wanted to know. I'm a big fan, actually, so I like what you are doing. I saw most of your posts and everything you do. I'm a huge fan.
Yeah.
But this is something unusual, especially in our region. So I wanted to know why, and then I can tell you, why not doing it.
Yeah, I can't pinpoint like this one specific reason.
Yeah.
It's a mix of a lot of things, but top of mind, I would say, we have a few years of experience, so we can share stories, mistakes, and we consume so much American content sometimes. Like I'd be listening to a great podcast, and then suddenly they're talking about, it becomes political. I'm like, man, I don't care about this. I wish it was more applied to the realities of building in the. So I feel like there's definitely an opportunity for us who work in the UAE to share a lot of our experience that's quite unique, as long as you have something to share that others can benefit from, or connect with clients, connect with the community. So it's a way to connect. It's a way to reflect also.
To give back.
Yeah, I think that definitely gave me more motivation. Like, sharing a pitch deck as an example, that we put in quite a lot of work behind that. It might help someone that's raising their round, and that kind of feedback energized me even more to think, what are other lessons, mistakes, points of views that are maybe my favorites are like points of views that you'll discuss while having coffee, and you'll be shy to say it publicly. Well, I'll give you an example, like the expansion to Saudi.
Yeah.
In the PR, everyone's like, yeah, you should. Or in pitch decks, there's a slide about expanding to Saudi. But if you actually talk to a lot of investors and founders, they'd be like, man, that's the worst thing you can do. It's super distracting.
It depends on your business. Yeah,
exactly.
It's not a must. If you have a potential, you do it. Saudi is an absolutely good market.
Exactly.
But if your business model doesn't fit the country, why you go?
Correct.
Saudi or not Saudi or whatever.
Exactly. So it's more about like balancing different narratives and just creating a healthy kind of environment for debates.
Yeah.
Is something that.
And I think also there is a bit of investor distraction here on to tell you what to do, why you don't do this, why you don't do that. I'm not sure if I have to share this, but I'll do it anyway, because we are building it in public, so I have to do it. So I texted you the other day to tell you that there is an institutional investor who is interested in investing or backing MENA fintechs or fintechs that are born in the MENA region. And you said no. You said, I'm not interested to explore this, which is very surprising to someone who is already raised capital.
Yeah.
So as a founder, you are always in a mode to raise capital as soon as you need that. What did you do that helped you to be in that stage, to say no to people or inbound from investors?
Once the 2022 tech bubble burst in some shape, it was one of the best things that happened. It was very difficult initially because it became more difficult to raise. Everything changed. You had to become profitable. People started looking at unit economics, revenue multiples.
Yeah.
So once we looked in the mirror, we realized we weren't going to grow into profitability. You need to make it intentional to be profitable. It won't just happen automatically.
Yeah.
So this is by 24 week, the first quarter, it was our first profitable quarter. And then we stayed profitable ever since, and it's changed a lot our mindset to combine high growth with a profitable business relatively early on in our 7th year in business. So that gave us a lot more freedom to pick and choose our partner, to think of who are the right investors for Sarwa, just have a long-term view without necessarily having to worry and be distracted by fundraising.
Interesting. So the other thing is about picking co-founders. So your co-founder is a childhood friend. I'm sure you were friends since very young ages. There are some moments where you have some disagreements in the business or something, and usually we hear investors say, don't pick your family members or friends, to start a business because, there is a lot to go through in the journey. Can you walk me through in a specific moment when you had a huge disagreement on something and it was the moment to choose between friendship and the business? How did you do that or overcome that disagreement, if it happened?
It hasn't happened actually.
Wow.
I don't know where it comes from because I agree. I have heard it once or twice around like not starting a business. It really depends. Like it's true. Like even for me today, I like that separation sometimes, but it's different. Like Jad was one of the smartest, strong fit people I know. It was so foundational to starting the company. And I've known him for a very long time that it only, on the contrary, I think the amount of speed and trust that there is in the relationship allowed us to go so much faster and really debate and having like a safe environment to make decisions, to disagree.
I think I know a lot of founders who shut down businesses. Some of them because of disagreements and, they couldn't find a way to resolve those disagreements.
Yeah, of course. There's a quote for that. Like I think more businesses die from suicide than homicide. So when someone talks about competition, etc., what's gonna kill you isn't necessarily your competitor. It's your own burnout or disagreement or a fallout. And I'm not saying we were immune to that. Like there was, maybe not with Jad, but like, there was a conflict and we had to resolve it. And
I'll ask the question in another way. So if I am a founder today and I need a co-founder, so what would be the best way, to pick my co-founder?
I'll tell you. So beyond Jad, we also had a third co-founder, Nadine.
Okay.
The way we worked with Nadine was she was the sister of a friend from high school. So that helped a lot to have, someone in common, how they think. There's already a shared belief, a shared network. And initially we started working together. She was a consultant for a month.
Okay.
And then it became very clear we're going to work really well together. And she joined us as a co-founder. So
Interesting,
having a trial period, I think, makes a ton of sense. Not overly spending time splitting or negotiating the initial agreement just to get like real world experience working together. Yeah, I'm trying to think of other models in fintech, but from my own experience, of course, people ideally is the best. The older, the higher trust, the better. And then otherwise, strong referrals. I think announcing to people you're working on something increases your likelihood of, I know someone that also wants to build. So being connected as well.
Yeah, a co-founder is like your wife. It's like your spouse. It's exactly the same thing. Just your spouse is in your personal life and this spouse in business.
Yeah.
So that's critical. So let me take you to my world, which is sales. So for me, you're able to disrupt incumbents because of two things. Because you're able to build the best product possible and you know how to put it in the hands of your customers. So the second is about distribution. You have a B2C model. So maybe you've got a product-led growth motion. You are not sales-led motion, but sales is so important for you as a founder. Can you tell me how did you master the skill of sales in your journey as a founder? I'm sure you don't have a sales background, but as part of your journey as a founder, you sell a lot of things. You sell your product, you sell your vision, you sell it to the investors, to employees.
Yeah, I was gonna say that. I think the first thing that came to mind when you said that is more the team and the investors I was able to bring on the journey rather than the classic selling or to clients.
Yeah.
I think it was a lot about the vision of what we were building, like a bold vision that's exciting, that helps improve the lives of people. There's something about helping retail investors, like everyday investors that have been completely forgotten by banks and underserved, that really resonates.
Yeah.
And especially like a product that we can use ourselves, that our family can use. It's very relatable as a problem where the UAE initially was very focused on millionaires and institutions. There was absolutely no one thinking and helping retail. When we saw that, we couldn't believe it. Like the fact that the regulations weren't even opening an account as a retail account. We pioneered selfie account opening so that people don't need to sign and provide a certified proof of ad. Like the rules were just built for millionaires or mainly high net worth. So I think the vision and the problem statement really resonated. So sharing that a lot with our investors and with the team, and then the team that we brought on board. It's not necessarily selling, but it's more like advice and marketing and brand building. Then they took it to a whole other level.
Yeah.
So there's that compounding motion that to bring in better people and more skilled people than
Yeah, and obviously because of the nature or the model of your business here, so product led, maybe you're selling more to investors in the early stage. And I'm aware that your Series A was the hardest fundraise in the journey of Sarwa.
That's right.
Yeah, walk me through the days when you were pitching and selling. I want to focus on selling. You were selling something that's very hard to get people to believe in. I want to learn from you. You know, what did you do to sell them the vision and so on?
Yeah, it's a tough vision, right? To convince you're going to build a new investment brand that's going to be managing, hundreds of millions of dollars and trusted, and that's consumer. People, investors don't like consumer and fintech all that much. Now it's becoming cool, but at the time, that idea just felt very naive, to your point earlier.
Yeah.
We tried really a lot of different things, from showing off our team. PR was a strong channel, showing off our storytelling capability, inviting investors to our events, regulators. We would invite them to our events as well, where we
regulators.
Yeah, exactly. Just like kind of bringing people together in the ecosystem so that they get exposed to what we're building. And because if you just hear what the clients are saying, you would have the conviction. The clients were really loving the fact that they could invest with low amounts, with low fees, with a simple experience. You just needed the rest to kind of hear and interact with that.
Yeah.
My coach always says, like, the best stories are always client stories. So I think bringing a lot of that to life on our social media as well.
Yeah.
And the thing with investors, once you have the first one, the rest
will come.
The rest is much easier. It's just about finding the lead investor, that, the first backer that believes in you. And I would say they believed in how much we wanted to solve this problem. They would see that energy from the founding team. And then they also really cared about what we were solving.
Do you think someone who is starting a business and not comfortable with sales, do they need to go for it, or how do you see that?
The way I rewired how to see it is it's all about fit. You don't need to sell.
Excellent, yeah.
It's like, this is what I'm doing. This is the problem I'm solving.
Yeah.
If someone believes in you and what you're doing and there's a strong fit, like most of the investors like from Mubadala, 500, Shuruk, all of that, it never felt like selling. It was always a conversation. And this is what we're doing. This is the team, and
which is a pitch, but in a very elegant manner. That's the point. Yeah. So you are selling without selling. That's the point. So
exactly,
you are selling without selling. That's why I call the art of sales.
Yeah.
You need to master the way to sell without letting others feel that you are selling to them. Yeah. That's the thing.
Yeah. You need shots on goals. You need to be out there. I think one thing we did really well is we would. And some people tell you don't go to like STEP, don't go to these events, and we were going to a lot of events, meeting people, just networking. And the Dubai, I don't know how it is today, but at least when we were starting, it was very small, like the VC and founder ecosystem. You see the same people at most of the events, so you get to know people in a casual, more informal environment as well.
So last question in this part, distribution first or product first, then distribution?
I'm much more of a distribution first as a mindset. I think there's a really good book called Traction that breaks down like 19 channels to experiment and find the right channels for your business. And that I really appreciate that book because in the introduction it says how most founders are 100% product. We could spend 100% of our time working on the product and not get bored. And just by knowing that, I realized we actually need to constantly think of distribution because otherwise no one who you are. So it's much better to learn how to do distribution because anyway, you're passionate about the problem, the product that's going to come on its own.
And you can build the product. So the product can be built. Now, how can you put it in the hands of the customers? And if they really want it, that's the thing. So let's move to the last chapter, which is about talent. As my capacity at LeanTech, we help a lot of traditional companies, banks and incumbents to upskill and reskill their workforces. And we constantly trying to help them cope with disruptors like you. Now, I want to know what is the secret sauce at Sarwa to have such a culture and group of people to ship with velocity and having a state-of-the-art product in the hands of your customers.
Ownership comes to mind for sure. I think one unique thing about our company is the amount of ownership that people take on. It's not just a job for people. There's such a strong pride in the work, and
Attachment to the brand, attachment to the
yeah,
vision, to the
exactly. Everyone
product.
is really contributing. They feel empowered. As a simple example, just by being remote first, allowing people to work from wherever they want, and there's just such a strong culture of ownership from day one. That is definitely a core ingredient. I think it's the positivity of the culture. The culture is ultimately the short answer.
Yeah.
High ownership, growth mindset. We constantly encourage people to experiment, talk about mistakes, projects that didn't go well, so that you encourage a culture where you can you do things differently, experiment, a positive environment, I think I mentioned, and high trust as well.
So if you are a CHRO at a big company, you are not the founder anymore of Sarwa, and your job is to transform, the company through people. What would you do? And you've been part of, management consulting firms, big companies operate, especially traditional ones.
The thing about culture is understanding it. Like we didn't define the culture like on in the first year or even the second. It's by the end of the second year that
Yeah.
we got together and we're like, let's try to define the Sarwa culture and the values. And it was an important exercise to see what do we want to reward from a performance, what kind of people we want to hire. In any org, I think the first step is really defining what's unique about this culture.
Yeah.
And then do you like it or not? Because there are some things, even as the culture evolved, there are some things we liked, some things we didn't like. Like the flat structure of Sarwa is something we had initially, then we moved away from, and then we really missed and brought it back. So I think there's an exercise to be made around understanding and defining what that culture is, and then seeing what are the things we like, what are the things we don't like that we want to change, and starting to address those.
How about skills? How do you see the importance of having the right people with the right cultural fit and the skills they bring to the table, especially now with AI and Gen AI? So we will see, complete different structures in a few years from now because of agentic AI and AI agents and so on. How do you see that? So combination of skills, cultural fit, and culture.
Yeah, I think it really starts at as early as the interview stage to have people that have that growth mindset that I was referring to, because I think it's maybe a lot of pressure on just the HR department to be completely centralizing that responsibility. The way we've grown about it is
You have to own that.
yeah, exactly. Like you want to have people that are it's built in where on their own they want to, if anything, they are the ones that are learning and telling you, hey, like, you mentioned AI. It's like the rise of search and ChatGPT recommending investment platforms as an example.
Yeah.
It's something that my content marketing team brought up as the latest trend. This is and a plan to how are we going to address that and be competitive there.
Yeah.
So it's not necessarily HR and then management that came in. It wasn't a top-down
Yeah.
issue. So I think the first step is, if you value constantly upgrading your skill set, fine, it's important to have a training budget, and there are different formulas around like a percentage of revenue that should be spent on that. But I think that's more bonus. Like when it comes to events and trainings, I think the core thing is ensuring you have people that are themselves curious and constantly improving. And in Dubai or the UAE in general, there's a lot of these people.
Yeah.
It's one of my favorite things about this country is just everyone you meet is constantly upgrading.
Yeah. So you mentioned something very interesting here, which is you get involved also in the hiring process, and you make sure maybe you try to do your best to be part of the, when you hire people. And one of the mistakes founders do, especially in when they reach the product market fit stage, you start hiring executives. You will need some people around you. And I've yet to meet a founder that didn't tell me that they made a mistake with hiring ex-executive.
Yeah, of course.
What is your story with that?
There's many. But
Many.
yeah, it's normal. I think
Yeah,
hiring, it's a best guess effort, and there's only so much you can prepare, and ultimately you have to learn on the job. But I would say like it is the most important task that I've had to take on. I think a lot of the credit of how things manage is the strong leadership team that has been there for almost 6 years in general. So it's a very high tenure, very, very strong leadership team. So that's on the good side. On the times where it didn't work out was mainly about fit rather than anything skill related or anything like that.
Yeah.
What's a story? I think a story is maybe going faster. There's one candidate where we went a bit faster than usual on the recruiting because it was referred by an investor. And it's an investor I really respect and admire. And the fact that it was a strong endorsement.
You broke your process.
Yeah, I don't know if we broke it because we still like ran it, but we probably overweight that factor. But it was an entirely different culture. That was much more sales driven org and more top down, that the fit was just very corporate and just not a fit. So it was mainly about culture fit. But I think we managed it really well where we acted quick. I think it's really important to act quick.
Yeah, very important.
Yeah, another fallacy is like thinking you need to bring someone with an academic background or ex big name firm versus promoting internally.
Yeah.
We've learned that, you know what, actually the preference is to promote internally.
Of course.
And
of course.
As opposed to the other way around where you have like a flashy candidate.
It's interesting because people don't know why Elon Musk is successful as hell as he is. Is because he's able to attract the best talent at very young age, and they stay with him for a very long time, and they just get promoted and get to a level. So for example, the most recent CFO of Tesla, he made, if I'm not mistaken, billions when he left Tesla, and he started just a financial analyst.
Nice.
And most of his leadership is the case. He never hires from ex big company, ex big university, this degree, whatever. Yeah, that's his playbook.
I think a lot of back to your question earlier, also on similar to that, like as a secret sauce that we really have at Sarwa. Beyond that is like, it's a buzzword. Forgive me, but it's first principles thinking.
It is. It's a buzzword,
but it's really important. Like, I think it took us time to realize, but we're so lucky that we can and look at it really at its core rather than, and not avoid being influenced by it works this way because it's always been done like that.
Yeah.
And just to re-challenge, being able to experiment and make up our own mind about a policy. Like, especially in the realm of HR, that's an area we like to do. Like cutting all meetings as an example, and then adding back what we miss. Working remotely is another example, and not negotiating salaries during interviews. So we would hear about something that's innovative, try it out, see if we like it, see if we don't. And I think that kind of culture where you make up your own mind about something is quite healthy, rather than relying and outsourcing that best in class to someone else.
One skill that every person on earth should have, whatever the industry, whatever the seniority.
Storytelling.
Which is about sales.
Yeah.
You see? Yeah. And I always sales is the most important skill any person can have, because without sales, you go nowhere. You keep doing what you do and you never reach your potential.
Yeah.
Yeah. So last question for you. I know you are a surfer. And obviously, as a surfer, you're always waiting for the right wave, in the ocean or somewhere. How do you apply that with the regulators? It's a skill. So, when you're surfing, you need to learn which wave I should take on. Now, and the regulator also, you need some skills to work with them and, catch them at the right time. Obviously, you did it very well when you got the license in 2 months.
Yeah.
It's not bad.
Yeah, I love that question. I think you really nailed the beginning of Sarwa, because personally, I was preparing to go and study for my GMAT and my MBA. And then we saw the first FinTech Accelerator being announced in Dubai. And we saw that as a once-in-a-lifetime opportunity to be part of having direct access to the regulator that was engaged, that wanted to meet founders and change policies and change the way things work to allow for innovation and be at the forefront of it for the UAE. So that was itself like the first fintech wave that we absolutely couldn't miss. And we also wanted to be closer to home, being based in the Middle East. So just the timing was phenomenal to start, that we paused all other plans to move to the UAE and do this. So in business, I think there's so much that goes into timing, sometimes being too early, too late.
Yeah.
And I think our timing was actually right on point. We got very lucky with that boost because once we got in, we got licensed. It gave us a lot of brand equity as an innovative company. And regulators, the way we were shaped was in a sandbox environment.
That was your wave. So it's a wave that you really,
yeah.
Got the chance to be part of it. And the other thing is, a lot of people don't know that a lot of success, there is luck.
Yeah.
Yeah. It is not just about, being smart and a good executor, a good operator or whatever. Luck is a big part of it. And you were in Canada, then somehow you saw this accelerator and you took the chance to be part of it. And here we are today in 2026, going to 2026.
Yeah.
Yeah.
It's a lot about, exactly. Like, I think that was the initial part. But then, our move to Abu Dhabi was very much within what you just said, because we needed also a regulatory framework that allows us to catch waves, because we missed out on a lot of them as well. Like initially, the self-directed trading boom, the crypto boom.
Yeah.
These were things that we didn't have initially that clients were really interested in.
Yeah.
So it taught us a hard lesson that, we need a regulatory relationship that allows us to bring these forward to the regulator. And we're lucky that in the UAE, you bring a request, you work with it, they share the feedback, and then within a couple of months, you have a live product. Once you figure out like the right client journey, disclosures, etc.
And I think it's the case everywhere. So if you are familiar with Wise, was the fintech to push MAS in Singapore to go for eKYC. So they went to Singapore and the eKYC was not available, and then they did something to push the regulator to do it.
Yeah.
In Sama, I know a lot of people in Sama, and I know a lot of stories where they made regulations because of them. This perception that there is no regulation, so we cannot work, it doesn't work like that. You need to come up with something that is truly valuable, to the economy, to the customer. Correct. And I don't know any regulator on earth that will say no to you if it is true that it will happen. So this is how I look at it.
Yeah.
Yeah, Mark, thank you so much for joining me.